Hey everyone, I'm Anita Sharma. Welcome to Market Call tonight on BNN Bloomberg. Our special guest is Jaime Carrasco. He's a portfolio manager at Canaccord Genuity, taking your calls, emails, and tweets on precious metals and North American dividend stocks. Our number toll-free, 1-855-326-6266. Our email address, marketcall@bnnbloomberg.ca. Our Twitter handle, @Market Call. It's always great to have you on the show, Jaime. We get to dive deep into gold. Gold currently just hugging. It's close to $1,500. A lot of your buddies, a lot of your colleagues in the space are saying if we continue to see hiccups with respect to U.S.-China trade, we could once again bump up over $1,500.
I would beg to differ. Thank you for having me back, by the way. It's always great to be here.
Thank you.
Before we get into gold, I think what's important to understand that the strategy is working. The producers are holding. I've always said that the producers were going to outperform, that we're going to give the leverage. I've just finished doing client reviews, and they're seeing the returns. They're seeing the fact that as this instability continues to move forward, the producers are outperforming, and that 20% that we started with is becoming a bigger percentage of the portfolio, and it's happening, right? The other thing, so I offer two solutions. One is a broadly diversified portfolio, utilities, pipelines, all the blue chip dividends.
Right.
But that has always had 20% gold. The other one's a standalone gold portfolio, which has about 15, 17 stocks within it.
Yeah.
Now that is for high net worth and family offices that needs to take a standalone stake in the sector because they don't have any.
Right.
Now, I'm getting a lot of calls from people that are saying, well, you know what, there's a lot of instability, and I like what you're saying. The other thing that I have to add, and I have to put a plug for Canaccord, because Tom Jakovich, who was a managing partner at BMO, just joined us on the gold team.
Okay.
So on top of that, Canaccord's also lining up early on into what I think is going to be an amazing bull market, because it's about instability. I've always said that you can measure what we're going through just on the stock market going higher. I have always argued that the stock market's going higher because the Fed's printing all this money.
Right.
Look at what happened. It took 2 weeks to unwind. How many months of unwinding the balance sheet, and we're right back up. We've gone up 40% from the bottom.
Yeah.
The repo market, again, the fixed income market, is clearly signaling that the addict of debt still needs it. And they, you know, it was like somebody trying to come off of that addiction, and the money needs to be printed. And because of that, yes, the markets could go much higher. I think we're just going to see a lot of volatility, a lot of uncertainty. And what a better asset than gold for that. Now, Macedonia, like there was a list of almost 5 central banks just in Bloomberg yesterday that were stocking up in precious metals. So, and it's physical. It's not paper. Now, what I find really interesting...
Does that kick in with seasonality, too? Are we also right now in the thick of seasonality with respect to gold?
That would be with regards to India and China, but not when Macedonia and Uzbekistan or some stan is buying gold. I think they're also signaling. Look at Chile. Look at what's going on with the peso. Every one of my Chilean clients that actually has physical gold that was listening to me 2 years ago is benefiting great because it's at an all-time high. Now, what I think is more important, though, is the fact that going forward, gold, as it starts to move, it's what's happening within the producers. The producers, if we can bring up one of the ETFs that tracks the producers, the VanEck, I think, is the one that we were talking about.
Okay, give us a symbol.
GDX, the GDX. It's holding up very well, right? It's not pulling back the way gold is. Now, that's an important signal because it means that smart money is coming into the producers, which is going to offer the leverage. So if you look at that, at the breakout that we had right here in 2019, it's not breaking. It's holding nicely, right? And that, to me, is very important because what it's signaling, if you look at the breakout in 2016, the traders came off and they came out of the trade. What's happening now is the traders came off at the top, but there's new money coming in. And that's a clear signal that when the next leg starts, it's going to be led by the producers and people are going to notice.
So what you're saying then is, you know, we've got analyst after analyst right now saying that they're not playing defense anymore. They're sticking with the cyclicals, or they're going back to the cyclicals. They're predicting, largely because of what you said, the Fed really providing that extra amping the markets with all that liquidity, that we're going to continue to see a bullish scenario play out for stocks, for equities. Now, normally one would think that would have gold pulling off, but you're making the case that the two in concert will rise.
Correct, because I've always argued that all the markets have been I don't want to use the word manipulated,
Right.
but they've been massaged
Yeah.
by printed money.
Right.
Some have been massaged higher, some lower. And at some point, the one that has been held down lower, would people be running into the Dow at 28,000 if gold was anywhere near 2,000 or 3,000? No, they wouldn't. That's the reason why I think gold has had the condition that it has, because the supply-demand fundamentals of the physical that is leaving and has been leaving for a couple of years just doesn't match this price.
Okay, well, I know we're just beginning our conversation on precious metals, and I'm sure our clients, our viewers rather, who are also clients, I'm sure, of other firms, will call in and get you to do some deep dives into gold and silver. Welcome back. We are with Jaime Carrasco. All right, Jaime, let's start with Tony in Toronto. It's an email on America's silver and gold. USA, he said he's interested in buying this for a 2-year hold. Is now the right time? This was your top pick, and I think a pass pick and then a top pick.
I love this company.
You love this company.
Yeah, I do. You know, what I like about this company is management. They have really performed extremely well in the worst of the storm in terms of they constantly were increasing production at the same time that they were lowering cost of production. Right now, we just had what reported would seem to be a bad quarter because they had some losses, but they were putting through a lot of expenses because of all the mines starting. But that, I think, is putting behind all of the work we've done, and going forward, as all of these mines start, we're going to see some really good cash flow. What I like about this company has leverage. It's to me, I love Agnico Eagle because I see that as Microsoft in the 95 cycle. This is going to be like Netscape, in my opinion, because it has the bigger leverage. And again, it's great management. Biggest shareholder, Sandstorm, Pierre Lassonde, who you know, he's number one on the mining side as far as I'm concerned, and Eric Sprott. And I'm right in there as well with those guys. So no, I love this company, management, the properties, everything. And we're going to be pouring gold this month, and by end of next quarter, we should have our gold production fully up and running. Okay. Which is great.
All right, let's head to the phones now. You ready?
Yep.
All right, let's do it. Let's bring in Michael from Vancouver. Hi, Michael.
Hello, Anita. Hello, Jaime. Thanks so much for taking my call.
You bet.
Second time today, Anita, so I love your show.
Thank you, sir.
Jaime, my question is on Wheaton, and I just wondered if you would recommend it. I'm holding, at this moment, I'm holding Agnico Eagle, and I'm holding the ETF XGD, and I was thinking of adding another gold stock or precious metal stock, and I just wondered what you thought of Wheaton. The one concern I do have is it is at the high point of its average of 2019, and I just wondered if is it too expensive to get in at this time, or should I wait for a holdback? Thanks so much. Have yourselves a great afternoon. Bye-bye.
Thanks. You too, Michael.
You know, it's funny because Wheaton's one that I owned years ago when it was whatever the name was prior. It's not one that I hold now. We still like it. We have it with a $51 target on a buy. However, you know, if you're starting to add a royalty company, I always start with Franco-Nevada. Next choice, I think I would go with something a little bit smaller. I like Metalla last time I was here, and Sandstorm as well is a new addition for me. We're going to talk about it later. I like those companies because it's Wheaton a couple of years ago. The thing with Wheaton going forward, it's going to pay out the cash flow, it's going to have the upside. But production uptake, I think you're going to get it from the other one. So I think there's a third component within the royalties that I'd rather have. And that's why I prefer the smaller ones going forward. I still hold Franco-Nevada, but if I have to choose between Franco-Nevada and Wheaton, I'd rather choose Franco-Nevada and go with a smaller one on the other side.
Yeah, investors are going to be really happy with Metalla when we get to that point. Oh my goodness, wow. Let's save that for a bit later, though. In the meantime, let's get to Henry in Hamilton, Ontario. Hi, Henry.
Good evening. Thank you for taking the call.
Of course.
I'd like to expand my horizons beyond Canada's shores. Could I get your assessment, please, of European residential REIT? Thank you.
Thank you.
You know what? This one's one that I've been looking at only because I'm getting taken out of my dream global, and it's German industrial, right? So we have this as a hold, though. We have it as a hold with a $5 target. So for now, I'm staying put, and I'm waiting to see. What I like about this type of company, though, is that it's giving me cash flow from outside of Canada. So it's a good hedge for the Canadian dollar, and that's what I want to replace within Dream Global. We just find that there was a rapid pace of growth, but there is consolidation within this sector. And right now we're on hold, have it with a $5 target, but I would definitely keep an eye on it going forward.
Okay, Jaime, thank you. Let's head back to the phones. Bring in Dan from Lethbridge, Alberta. Hi, Dan.
Hi. I'd like Jaime's opinion on Pan American Silver, please.
Okay, thank you for calling in.
Pan American Silver is a great company. It has leverage. It's not one that I own. I rather own First Majestic instead of Pan American. Again, we're looking at comparing the bigger companies, the ones with the bigger leverage, and within that spectrum, I'd rather put money in First Majestic than Pan American. One of the problems is that, well, it's not really a problem, but I got to buy it sorry, it trades in Canada. Sorry. That must be new because I thought it traded in the U.S. only. But again, one of the issues with it is the fact that I'd rather have First Majestic. Again, I like silver more than gold. I think gold will have an even more levered move to the upside. So I think if for some reason you like this, I wouldn't dissuade you from buying it, right? I just prefer the other one more. I think it'll have better leverage on the upside.
Okay. Thank you very much for that, Jaime, and thank you everyone for your calls and emails. Let's get back to the phones. Ron in Edmonton, Alberta has a question. Hey, Ron.
Yeah, last time you were on, you liked Tyrion Life Sciences, and I put a toe in. And I'm just wondering, would you double down at this point in time, or would you wait for a while?
All right, thank you.
Good question. Well, first of all, I have to say that I got stopped out of this when the whole market started pulling back. So I don't own it anymore. But if you still own it, I would be waiting, because I think that the cannabis sector is going through a normal consolidation. I think it's going to be much less than the gold and silver consolidation, which took 6 years, right? So I would be keeping an eye on it to see for things to start moving higher, and at that point average down. I think it's still early. Let's see. I would especially be looking at around December 15th, December 20th. But a company like this, I think you're going to have some tax loss selling occurring coming into the end of the year.
Right.
So I think that's the point to really start getting some feelers and putting some positions on. Chiron, I was in Colombia about a month ago, and I met with them. I met with 7 different companies. I like what's happening in Colombia. It's very interesting. So it's one that I'm definitely keeping an eye on. We still like it. We have it with a target of $3 actually as of November 18th. So this is fairly new. We like the way they're switching. They're becoming more of a marketing company in terms of how and pharmaceuticals actually. I like the lines of businesses that they're taking. In Colombia, it's all CBD, it's all medical. And that's very important because it's a nice stepping stone to the rest of the world. I also think that Colombia is a place to be looking at because the energy cost is zero, right? And that's gonna, they can grow. They've been growing for a long time. Let's put it that way. So yeah, and I think Chiron within that selection of companies is one that I would definitely look at again.
Okay, thank you, Jaime. Back to the phones. Let's bring in Mark from Jarvis, Ontario. Hi, Mark.
How are you?
Doing well, sir. How are you?
Not so bad. Thanks for taking my call.
Of course.
I would like to know about Sprott Physical, and could it be a convenient replacement to hold bullion?
I really like the Sprott Physical, and I think it's a better acquisition than the GLD, which is the #1 choice for people. But I think the GLD carries quite a bit of counterparty risk. I just don't know how the GLD is going to be able to match its gold to paper contracts. I don't know how much is there or how much is in storage and who has what. I know that with Sprott, it's segregated. They've set it up a long time. It's held in Canada at the Ottawa Mint. So yeah, I think it's a great way to play the physical on its own, and I would definitely start there for my gold position. Now, gold to me is like money. It's no different than holding the U.S. dollars. The real speculation is in the companies. Okay.
What do you prefer?
I prefer the companies. I want the leverage.
Yeah, you want the leverage.
Yeah. So what I always say to clients is keep some physical gold or silver at home or some cash put away. That's the best way to store it. I was just reading a report that the wealthy are looking for storage for safety deposit boxes throughout the world, and they can't find them. Right.
Correct.
Well, I wonder what they're storing. Right. That's where you keep your physical gold. It's physical on its own. Again, the Sprott has been a great place to sit on when I'm sitting on cash. I always have about a 15% allocation as my cash, and I do prefer the companies. I think the companies is where the real game is going to be at.
Right, the real action. Okay. Let's head to the phones again, bring in Alex from Montreal. Hey, Alex.
Hi. I'd like to ask you about the AG growth. I managed to pick the stock up at about 41 and change. It seems to be going in the right direction. Is there much upside on that? Thank you.
Thank you.
This is an interesting one. I've been looking at Ceres, this one, and a number of the agricultural companies because I do think that we have a bit of a problem coming into the spring. First of all, the early snowfall, and then the floods that we had in the fall. Food production in North America, I think, is going to be in trouble. So all of these, I think, have quite a bit of upside for a while longer. The numbers I'm hearing from the agricultural department and growing in the U.S., I think 40% of the crop is not there, which is highly inflationary.
Yeah.
If they want the inflation, they should start counting food, right? And then they'll get the inflation that they keep looking for. So I do think that these companies are worth taking a look at and putting some money into. How much to allocate? I don't know. I think that a 5% allocation within a portfolio would be very suitable.
Okay. All right. Let's get back to gold and bring in Peter from Huntsville, Ontario. Hi, Peter.
Hi, how are you tonight?
Doing well.
IAMGOLD, a mid-tier producer, has had its struggles throughout 2019 until just recently, and they've appear to have turned the corner. Your thoughts regarding the outlook of IAMGOLD as investment and also a possible takeover target?
Takeover target? That's a good question. I'm not sure about a takeover target. I think there's some that are a little bit cheaper. Maybe. However, I wouldn't be buying these for the takeover target. I think right now you want to be again. I see the companies like the quiver of surfboards within the tsunami that we're going to ride on the precious metals trade.
Yeah.
IAMGOLD is one that I would not be looking at right now. We have it as a whole. They haven't executed as well as they should have, and because of that, I think it's not one that I would want to look at. I would rather look at the ones that the money has been ending in, because that's a clear signal that the institutional money will continue going in. Again, we are early on into this wave. If you look at the recent move, I think we're up to 2% or 1% of participation in this sector. A couple of 15, 20 years ago, we were looking at 5 to 7%, so there's a long way to go. I think what's more important is to just look at the ones that have moved the best, and those are the ones that are going to attract money the most. Agnico Eagle just raised dividends by 40%.
Wow.
Right? That's coming from strong balance sheets, and they're making money at producing gold at $600. I don't think you have to be looking at the ones that haven't performed yet, hoping that they get taken out. I think, keep it simple, and again, solid management, good reserves on the ground, low cost of production in geopolitical areas that are not going to be taken away from you.
And if you really want to keep it simple, you said you prefer the companies over actual bullion. And on the company side, if you are, let's say, a newbie or a novice investor with respect to gold, but you appreciate that you need to have somewhat of a position here, wouldn't it make sense to have it in a basket, have it in an ETF, so that maybe if you don't know the internal workings of an IAMGOLD, you're hopefully, one would think, protected somewhat.
It is. And the one that I would go with, which actually I'm having a bit of issues with, because it pays a small trailer and I have it in my fee-based accounts, is the Century Select Precious Metals Fund, PME and the MMP. One
PME?
is, it has a high dividend, but a lot of that is repayment of principal on one of those, so one's taxable, one isn't. But I think if you look at the portfolio, it's about 17 companies, and I own about 5 of those.
There you go.
And so it's a well-diversified portfolio. Kevin McLean used to run it. Somebody else is running it now, but the strategy hasn't changed too much.
Okay, let's take a break. Let's come back to your past picks. And by past picks, we only really mean one past pick. Stay tuned, and we'll talk more about Metalla. You're watching Market Call tonight. All right, past picks time with Jaime Carrasco. Metalla royalty. You were acknowledging that you weren't really watching this closely. You put it in your portfolio and kind of kept moving onwards. Well, in the meantime, in between time, if our viewers had purchased this on January 16th when you recommended it, they'd be up a whopping 72%.
Again, what I like about Metalla, you know, all of these companies are just getting going. What I like about this one is they have all of these projects that are starting to pay cash flow.
Right.
They have acquired more projects. The dividend's increasing. So going forward, what are we going to get? We're going to get upside from the projects that they finance.
Yeah.
You're going to get continued increase in dividend as all of those projects kick in. And on top of that, you're going to get the reserves on the ground value, and you're going to get a dividend increase. So I think it's one that I'm quite happy to hold and let it ride. One of the things that we were talking about, so the portfolio started at 20% this time last year. Now it's sitting at 37, but I haven't cut it back. I haven't done any asset allocation rebalancing because nobody's in the trade yet, right? I want to let the next wave go because I think the wave that's starting now is the one. The first one's always a stealth one, only the ones that are participating. You have new money coming in now, and that money is going to accelerate as we break above 1550. Well, it's going into the producers already. So I think the producers have already kind of taken off or held their position. And I think going forward, I'm going to let that build, and then I'll consider what do we do.
And you had alluded to this at least 2 times, the 2 previous times you've been here on Market Call tonight. You said that when we break above 1500, and then you came back, and when we actually did break above 1500, you said there is going to be some consolidation. It is going to drop below 15, and then you got to wait for that. For the folks who missed the first go round, they're going to have an opportunity to lock in a position under 15. And so that's kind of where we're treading right now.
Right. If you look at the 5 or 4 years prior to that breakup, that was all patience. Everybody that held on has benefited. And now they're seeing the benefit, right? What's happening now, though, is new money is coming in. New people are figuring out, okay, how can I reposition my portfolio? I'm getting a lot of calls with regards to that. And so even I'm seeing new money coming into the portfolios. I think when the next one goes, you know, that's when the light's going to come on because you're going to see a massive move. Do we get above 1900? We'll have to see. But I think it's going to be pretty explosive.
Okay.
Right. You know, it's important to understand that at the COMEX, on a yearly basis, we are trading more than 6 times all the gold that we have produced throughout the history of mankind. That's a crazy number. Like we're trading more than 300 times annual production. Like, how is that going to resolve? That musical chair analogy that I kept saying, that, you know, the central banks are taking away the chairs, but you're getting more and more people with a piece of paper.
Right.
When the music stops, there won't be many shares left. The producers are going to be the place to get it.
Okay. Also a place to be, many would say, we're not seeing it in your returns right now, though, is emerging markets like India. Fairfax India, though, off by about 13%. What are we waiting for here? Because the long argument against companies that are investing in India is that the promise is there, the luster is there, but for some reason it's really tough to cash in. Is that time coming up soon?
I'm quite happy to hold on to this.
Okay.
I like the whole One Belt Road that the Chinese are building. India will be part of that. India is definitely readjusting itself. You know, if you look at Fairfax, I've invested in this because of Prem Watsa and what he did in Canada over the last 30 years. If you look at that 30-year investment in Fairfax and you're just looking at a little blip, well, you missed the whole ride. I'm quite happy with his stewardship in terms of the companies that are being bought within the portfolio. It's in the financial sector. Again, in India, 5% of homeowners have home insurance. It's a big market to be had. I'm quite happy to have it. I also think that I like it because, one of the reasons why I like it is the currency. I think as the whole economic bloc of Asia, which I think it's California in 100 years ago, you know, as that starts to take off, all of these financial companies we own within that are going to appreciate. And that's my stake on it. With this one, I use asset allocation. Whenever I rebalance the portfolio, it'll go back to the 5% that it's in the portfolio and take advantage, continue to buy more. So, yeah, no, I'm holding on.
All right, you're holding on, and you're also holding on to some cash as your third pick. Give us 20 seconds on that.
No, that's all spent. It's spent in convertibles now. So, yes.
All right.
So all of my cash, all the cash that we raised last fall has been redeployed into convertible bonds. I've really bought 4 years of time so that I can allocate it later. Let's see what happens to the market.
Let's see what happens. All right, Jaime, let's take a break and get back to our viewers' calls. Jaime is a portfolio manager at Canaccord Genuity. Our phone number, 1-855-326-6266. Folks, we're also taking calls on pipelines as well as utilities. We love the gold calls, but feel free to call in about utilities and pipelines, too. We'll see you in 2 minutes. Welcome back. Let's get to some more phone calls and continue our chat on gold. I still want to pick your brain about where you see the spot price moving. Meantime, let's get to Michael in Burnaby, BC. Hey, Michael.
Hi. Back in early August, Ross Healy recommended Fortuna Silver mines at a price of $5.70. Since then, it's been dropping. Would you continue to hold this, or what's your opinion on this stock? Thank you very much.
Thanks,
I'm still holding.
Yeah, Ross is really bullish on gold.
No,
as well.
I'm still holding Fortuna Silver. It's part of one of my big producers. We like it. We have it with a $6 target. I think with this one, what I've liked is that, last year when you had Kirkland Lake moving, North American Palladium, Largo, I kept taking money out and buying more of the other ones. I think with this one, it's one that has the leverage, just like First Majestic, which it hasn't moved yet, but I've taken some money off for Majestic to buy into this one. It has good properties. They what was the issue? Hold on, there was something with operating results that just came out. So so they had a EPS miss on Q3. But the sales volumes were higher. I believe it was because of mine issues, right? Everything's getting built out. I think with all of these companies, it's a leverage. It's a matter of waiting. Again, within the one portfolio for equity income one, where I only have about 6 holdings, that's not there, right? But it is within the precious metals portfolio. So if you had to choose 5 companies, it wouldn't be one of them. But if I was choosing 10, yes, this is one of them that
so it's not top tier, but it's certainly there in the lower in the list.
Yeah, yeah, and it's one that I want to hold for now until I find something else.
All right, let's continue this conversation before we get back to gold. We'll bring in Tom in Mississauga. Hey, Tom.
Yes, hi.
Hi.
Yes, I wanted to ask about Silvercrest.
Okay.
Clearly, it has extremely high grades of both silver and gold, about equally split.
Right.
Located in Mexico, and will be coming in production soon. I'm wondering when your guest will let us know when they think it would be in production, and if there's any more upside left in this company.
All right, great questions. Thank you.
When's it going in production? I'm sorry, I should know that because I own Silvercrest, but it's one that I like.
Yeah.
I like the fact that they. One of the things that I look for in some companies, the exploration companies in particular, is the fact that as they're drilling out, they can grow the reserves. They have been growing their reserves. They're upbuilding the mine, and they have the leverage. I would have to find out actually when is that mine going online. However, it's one that I hold. I like it, and I haven't really thought of selling. I haven't done much of a rebalancing just yet, and I think it's time. But at that point, a lot of them have moved up, right? So I'd be probably trimming it back a bit. However, it's not one that would be a bad entry point right here, even though they've had a hell of a move over the last while, and it's because of the drill bit. The drill bit is speaking, and they're finding good reserves. Again, I like silver more than gold, and I do have silver companies, and there are very few pure silver producers.
All right. All I can see thus far, as headlines go, is that they've announced the Bobby Vista vein high-grade expansion. That's all I see breaking across the wires right now, and this was as of November 14th. So let's look into that, and if we get more information, we'll deliver to you before the end of the show. In the meantime, let's get to a tweet from Graham on Dollarama. A little bit of a shift in companies here, but you're taking this call. What do you think of Dollarama? Do you shop at Dollarama?
Actually, yeah, I have popped in for a couple of things that I know that I'm going to throw away. There's one in Collingwood and it's right beside the Winners, which happens to be my favorite store.
Winners on, well, I was just going to say, and the earnings reflect it, right? TJX.
Oh, really?
Oh, yeah. It came out yesterday. Winners, Marshalls, the whole group just doing quite well.
Yeah, I haven't ended up at a high-end clothing store in quite a while because of Winners. However, and actually, you know what I like at Winners
to the trend.
Is the coffee where you can go in and buy. They always have.
Oh, yeah, in the checkout.
Yeah, in the checkout.
Right.
Anyways, you know what? We have this as a whole. It's kind of reflecting that hang on, signs of extreme greed. So just using seasonal strong period before the U.S. Thanksgiving to trim into strength. So yeah, no, we find that with this one, no, we are hold. I don't think we would be recommending anybody to add it. I'm not following the consumer's discretionary more as a sign of what's happening within the economy more than anything. And that's why the Dollarama, in terms of worst case scenario, if we get into a bad economy, at that point I would be looking at acquiring something like that if I was looking for a hedge. But for now, we have it as a hold, and we recommend just waiting.
Okay. We're not going to wait for this next call. We're going to bring in Robert from Simcoe, Ontario. Hi, Robert.
Hi. Thank you for taking my call. My question is on Franco-Nevada.
Right.
Significant position, keeping in mind that it was at the issue price of $15.20. Does your guest figure that part of this should be sold by now? Thank you.
Okay, thank you, Robert.
Okay, Franco-Nevada is the one company that held steadfast over the last 6 years. If you can bring up a 6-year chart of this company.
Why don't we do a 10-year?
10-year, even better, right? It shows you how the strength of it. Now,
boom, there you go.
That made sense because it's the biggest royalty out there. It's not just gold. However, going forward, I would be trimming it back and going into the other producers, the blue chips, the Agnicos, the First Majestics, only because they're going to deliver the leverage, right? This Franco-Nevada will move. It'll attract money, but it won't have the leverage going forward. So the way that I would look at this is compare Microsoft to IBM, right, through the 90s, where IBM moved, but Microsoft really moved, and then Netscape really moved, right? So if you own it because you understand the sector and you already have it, as it sounds as though he has it from IPO, I would definitely be switching into others, right? If you don't have an overweight position, if it's grown quite nicely from IPO. So if that's the case, again, asset allocation, how much of your portfolio is in it, how comfortable are you? But I'm pretty comfortable with the dividend. One of the things I like about this company is the dividend formula. If gold really starts to move, the dividend will continue to increase. But keep in mind, it's not 100% gold. So for the dividend, I'd rather have Agnico, which is the same formula, but the dividend will be all coming in from gold.
Okay.
Okay.
All right. Let's take a break. We're out of time in this segment. We still want to get to a question that I have right here. Welcome back. We are with Jaime Carrasco. Let's get back to the phones, Jaime. We'll bring in Raymond from Vancouver. Hey, Raymond.
Hey, guys. Thank you for taking my call. I have a question on Oceana Gold. I kind of picked it up last week. Late last week when it had, I think, about a 17-20% drop. Can you tell me what the news is and what are your thoughts on it? Thank you so much, guys.
All right, you bet. Thanks for watching.
Because they lower their forecast, actually. It's not one that I own. They reported 108,000 kilos, which was lower than the expected 120. So they're having production issues. If I own this, I would be looking at it. Why the production issue, and is that just a quarterly event? One of the things with these mines, as they're starting production and they're starting up these mills, like these are not small facilities, and there's always some mechanical problem or something. So it could be an opportunity. It's not one that I own, but I would definitely study what is going on, and if I'm looking to add a position and it's just a quarterly hiccup from the startup, then I would probably add some more.
But if it's a deeper issue?
If it's a deeper issue, but it's not. It's production issue. So why was the production lower? That would be my question for the caller.
You might want to take advantage of this dip.
It's funny because a good example of what I'm talking about, a couple of years ago, Agnico had problems with Brondex in the mine, right? And the stock fell like 20%.
Right.
Well, it was a great buying opportunity, right? Because they addressed everything. They dealt with it, and we kept going. Same thing with they had an issue with Malartic when it was first starting up, right? So usually these are opportunities. It's a question of understanding what you own, why was the reason, and then figure out if it's bad management. That's another story.
Okay, very quickly, we're talking about this off air. Let's do it right now. I was asking about the spot price of gold. It seems to be creeping up ever so quietly. What does that tell you?
Well, everybody's calling for lower prices. I don't think anybody really knows what's going to happen with the gold price. I personally think it should be much higher than it is. What's important and what I would be looking at more than anything is what's going to happen in December. Because in December, we have a lot of repos rolling over. Forget all the noise this week with the impeachment and Brexit and all of that. The only news that I care about was the fact that Powell was at the White House 2 days ago.
Right.
What was discussed, right? Because there's a lot of noise occurring on the repo side, right? What the Fed is pumping out 100 billion already, right? So that's a lot of money that is being required. In December, we're going to have another rollover of the repos, which is going to require a lot of liquidity. What's going to happen at that point? If that starts to really go, I think forget about gold, keeping it at 1,500.
Okay.
I think gold as the monetary hedge, central banks know it, they're buying it. I think the paper market is also tied to the repo side, by the way. The futures contracts are tied to the financing of the repo side. So if those start to go, it's also is going to be reflected within the repo.
All right. Let's squeeze in a couple more calls here, Jaime. Let's get to Jeremy in Nanaimo, BC. Hi, Jeremy.
Hi there. I was wondering for your thoughts on Dundee Precious Metals and Kirkland Lake Gold. Thank you.
Okay, thank you. Let's stick with Dundee.
Dundee Precious Metals is, you caught me by surprise.
Oh, okay.
Hang on a second, because I do own, is this the diversified plate, or is it sector specific?
Let's see here. I think it's sector specific, yeah.
In Namibia and Bulgaria. Okay, right off the bat, geopolitical risk.
Yeah.
Personally, I would not.
Serbia, Armenia, Bulgaria.
Exactly, right? Those are countries that I have no idea what the politics are gonna be next year, and because of that, one geopolitical risk to me is the number one issue with a lot of companies. Right now, a lot of companies are trading ridiculously cheap with no geopolitical risk. Why assume it, right? So for me, that would knock it out of my purview right away.
Do we have a second to quickly pull up Kirkland? Jeremy did ask about that. Are you
Kirkland Lake, I still own. I keep trimming back, and I keep holding on to it. It's a great, it's funny. I think Kirkland Lake, what I like about it, it's a really good example of what's going to happen to a lot of the good quality companies. Their benefit is they had that big discovery, production kicked in.
Yeah, look at the 5 years.
But actually, the biggest shareholder of this was Eric Sprott, and he pulled off 14% of it to buy into other juniors, which is exactly what I was doing, trimming back, buying into others. So it's a really good one to hold, and also be trimming back to add other things, right?
Keep that as your base, and
that's right. That, Agnico, all of the big boys. That's what I do with them.
But still dip your toes in, because you got to be careful with the smaller ones. They're not all going to pay off.
Well, it's not correct, but this is not a small company anymore.
That's what I'm saying.
Right?
When you're
cost of production, reserves, and massive leverage to the upside on the price of gold, like all of them.
All right, let's take a break, and we'll get back to more of your calls. You're watching Market Call tonight. Lots of calls, no time though, Jaime. We got to rip through these now. We got to get through 6 of them. Apologize, folks. We're not going to take your calls now, but let's start with Vermilion. Ted would want to know about this stock. What do you think about Vermilion and that dividend?
Vermilion is Canadian oil company.
Yeah.
We have it as a $35 target. It's one of the few oil companies they still hold. Again, the dividend they don't sell here, and yes, I like it, but I don't like oil.
Okay, you don't like oil. Let's get to Dan in Windsor. He's curious about Yamana.
Yamana, I do not own. We have it as with a 650 target. They had quite a bit of operational improvements, one-time payments, waiting on cash. We maintain our buy. They're, I don't know, for some reason, Yamana has never attracted me, and I don't particularly like it.
Are you attracted to Argonaut Gold? This is a question from our lovely Peter in Vancouver. Why do you like Argonaut?
Good leverage, right? They have good torque, but they had a couple of production issues. We have it as a buy with a $4 target. El Castillo, yes, they're starting up their mine, and again, they might have some issues, but at some point, I think it's going to take off.
All right, you asked about pipelines. Well, you got a call on it. Frank in Calgary wants to know your favorite pipeline. You said it's Pembina, and we know Pembina's got that sweet dividend.
When it comes to the pipelines, I see them all as monopolies. So what I do, I have a selection of 5: Pembina, TransCanada. I always just switch between the one that has the highest dividend yield. Enbridge, to me, is my stalwart because I always follow it over time. I remember at the bottom of 2008 in December, we had a 9.5 dividend yield. So, yes.
Okay. Pembina's dividend 5%, Enbridge 5.88. Yeah.
So whichever one has the highest dividend.
Enbridge right now.
I buy them for the cash flow.
Jaime's money's on Enbridge, but Pembina close second. Dave in St. John, New Brunswick, Bello Sun Mining.
Bello Sun I used to own. I don't own it anymore. Just a little bit left, but it's in Brazil, and I'm kind of warming up to Brazil. The changes with Bolsonaro, but let's see where those political changes go. Brazil has a good history of going a little nutty once in a while. You know, the samba gets to them, and we'll see what happens.
The samba, crazy Brazil. All right, let's get to Barrick from, this is Ron from Gibson, BC.
I don't like Barrick.
Okay.
Yeah, Barrick to me is like Microsoft.
Yeah.
I just think that, you know, it'll have the leverage, it'll move higher, people will buy it, but no. I'd rather, you know, if you look over the last 5 years, you compare that to Agnico. Agnico has outperformed, and I think it'll attract more money.
All right, you got 30 seconds. I can't believe this. What do you want to spend your time on?
Back to your question. You know, I think that yes, I think that with gold, what's important is how the chaos builds. December, we have the repo, and we have Brexit. What's going to happen there? You know, and are they going to impeach him, right? So it's a real drama out there, right? A lot of uncertainty, and it's the uncertainty that's good for gold.
So far, impeachment really hasn't played out in the markets. We're not going to read too much into that.
I don't think it will. It's all hearsay so far. So, you know, I tend to be agnostic. I don't like, you know, whether it's Trump or Hillary. I don't particularly care. All I care about is that I see more and more uncertainty. The 30s are replaying.
Yeah. Okay. And hence your bullishness on precious metals like gold and silver.
On having a hedge.
On having a hedge, exactly. Jaime, always a pleasure. We're not saying goodbye yet. Your top picks are straight ahead, folks. Thank you for your calls. We'll see you in 2 minutes. Yes, time went by quickly, right? So many calls. Jaime Carrasco, so popular. Market call tonight. Sandstorm Gold, top pick number 1.
A new royalty I've added to the position. I got taken out of North American Palladium, so I had money to spend.
Okay.
I had done my homework on this one. Actually, they're one of the biggest shareholders of USA as well, so I get a little bit more USA.
You're still
but I like
on USA.
I am. I like the way that Nolan's executing, very well managed, and I think they're just like Metalla and the other royalties. I expect quite a bit of them. It's that leverage. It's the cash flow. And they've been buying back their shares, which is great, right? They haven't started a dividend yet, but they've been reducing their share count, which to me is very important.
All right. Agnico Eagle Mines. We keep hearing about Agnico.
4 years. 4 years. This thing was at $22 4 years ago. Like when everything was still going down, these guys hit bottom and they've been moving higher. They've just increased dividend by 40%. Again, these guys have executed in an unbelievable way. A lot of mines still to kick in, so cash flow will continue moving, producing at 680, I believe it is. So massive, and gold in Canadian dollars is at $2,000. So massive profit. That'll continue to increase the dividend. They've just executed unbelievably, and I still like it and hold it and recommend it. And you're also recommending Harvest Equal Weight Global Utilities ETF. Yes, I was. Again, I was looking. We got taken out of. We're going to be taken out of Dream Global. Right. That's about a 6.5% dividend yield that I want to replace, and I like this. It's global. I like the portfolio of companies. It's the top 15 utilities. Enbridge is in there, and a couple of Canadian companies, Brookfield. But again, the yield, and I get income from outside of Canada, so it's diversified. And they also have a covered call position within it, which increases the dividend yield. So, and it's Harvest. I like the management, Paul McDonald. Like, if I said his name wrong, I'm sorry. I always have a bit of a blank, but well-managed ETF. I like the guys from Harvest. I want to go back to Agnico. We've got a bit of time. I want to pull up a 1 year, guys, if we can. Thank you in advance. We did see a bit of a dip, and I'm pretty sure Agnico is playing out like a lot of the other stocks that we've seen. All of them. As far as gold goes, right? So you're seeing the pullback from September. This is making the gold bears, if you will, a little skittish. Not at all. No. This is the gold. This is making the gold bears walk the other way. Because look at what's happening here. If you look at gold, it's fallen off from that bottom. Yeah. Right? Somebody's been buying it. Money's coming in, right? You're talking about the bottom of October. At the bottom of October, gold has kept going, and it broke at in the middle of October. It broke below 1,500. So if you overlay a chart of gold on that, it's one's going the other way, the other one's going higher. So that's signaling that smart money in this run up, it's going to come into there you go, right? Smart. It's a little bit askew. If you actually do just October, you'll see the difference. However, the important thing is that signaling to me that new money's coming in because this is one of the best companies to own. All right, so this is folks basically building their position ahead of what you see as turmoil going into 2020. And once again, your thesis isn't that we have, they're not going to run mutually exclusive of each other. No. We could have a bull run in equity markets, and alongside that, see gold continue to rip. Correct. Okay.
we're out of time. Jaime, we could spend a whole week chatting with you. It's
Thank you for
always a
having me
pleasure.
back.
Jaime Carrasco, I'm Anita Sharma. On behalf of our senior producer, Aaron Sabeski, thank you so much for watching. Stay warm and always consult a qualified financial advisor, folks, before you make any investment decisions. We'll see you tomorrow, 12 o'clock Eastern, and then again, 6 o'clock in the evening. Take care.